Hi there, my name is Jon Bey. I am the CEO of Standard Uranium. We're a Canadian junior exploration and project developing company. We're based in the Athabasca Basin of Saskatchewan, Canada. We have 11 projects, 7 will be explored this year and 5 being drilled. But thanks for
Jon,
hearing me.
well, yeah, good to have you here, Jon. I appreciate it. It's a busy period, just kind of pre-PDAC, because there's lots of other conferences and events going on at the same time. So thanks for making the time. Look, we saw you last September 2022. You look like a very different company. You were then talking to me about trying to make discoveries around the Athabasca Basin. It looks like you've changed your model. Is that true?
That is true, yes. We've now transitioned to a project generator / exploration company. So we now have 11 projects in the basin, and we've got JV partners funding 4 of those projects right now.
Why the change? Why not? Discoveries is where it's at, surely.
Yeah, as you know, exploration's expensive. I mean, we started off as a one project company, and we started exploring and having drill programs, raising money, drilling. And it gets to the point where, you've got more projects and raising capital nonstop. Investors get tired of it. And if you don't make a major discovery, they think it's a failure. So we figured out, look, we've got to transition. We've got to find a way to keep our projects being explored, bring funds in from other companies, keep our flagship to ourselves, and keep driving the company forward.
Okay, you got to be in the game to play the game, right? I guess. So, tell me about how you transition, because 11 projects versus one, and basically bring in $31 million of other people's money to kind of develop those. All do make money? How does that drive share price, etc.?
Well,
Explain
first
the
of
model
all,
tonight.
The exploration game is about discoveries. We've got to make a big discovery. And when the discovery is made, in the uranium space, a high-grade discovery, it's a 10 to 20x right away. So that's our goal, to keep exploring, keep drilling, keep putting, drill holes in the ground in all our projects. And eventually our team is phenomenal. They're going to make a discovery. So it's a matter of just keeping the funds coming, keeping the drill programs going, and telling the story, letting people know who we are and what we're up to.
Right. But, okay, so the money's come in, but you're the operator. Is that what you're saying?
Yeah, exactly. So the deals we've done with our JV partners is they pay us a combination of cash, shares, work commitment to spend money on the ground, and they pay us to operate it. So we've got an incredible technical team we've built over the past 5 years. And for new entrants coming into the space, they see us. We're a company that's got the technical team that'll actually do the work, and we'll get paid to do that work. We've actually got all our projects agreements with First Nations, all the drill programs permitted, all the vendors lined up, so it's a turnkey operation. So for us, we have our JVs pay us cash, which keeps the lights going, keeps our team paid. They pay us to operate, and they pay us in shares, and they spend the money on the ground. So it's a fantastic operation for Standard and our team.
Okay, I've got to ask the question, right? Because when pre this model, you were doing all of that stuff yourself. You didn't make a discovery, I would argue, of note. So why have these 4 groups entrusted you to go off and do it? Was it just a question of you didn't have enough money to do what you wanted to do, or could you actually point to the fact that actually we do have a track record?
Listen, exploration is difficult, and uranium exploration is incredibly difficult. Our technical team is having great success with every drill program vectoring in on those discoveries, but they take time. You look at our neighbor to our Davidson River just to the north, F3. I mean, they worked that JR zone for 15 years before they made that discovery. You just got to keep drilling. You got to keep exploring. You got to keep zoning in on it until you make that discovery. You've got to be persistent. You got to keep at it, and you got to keep going. Those companies that die out, they can't do that. So we're proving that, look, we're going to take other people's money. They're going to fund our non-core assets, and we're going to drive our Davidson River project forward, which is our home run potential, we believe.
Right. And so talk to me about, give me an example of one of the deal structures here in terms of so they put a bunch of money in, you're operating management effectively. How do your shareholders make money on the deal structure which you have? Give me just one example.
Yeah. So for example, we announced a definitive agreement on our Atlantic project today with a company called Atco Mining. That's a 3-year earn-in where they can earn 75% of that project. We'll keep 25%. They're going to fund 3 years of exploration. And if they make a discovery, that's a massive, massive home run for our shareholders. And we'll still own 25% of that project. So it's great.
To what point? Because at some point, they're going to spend 3 years worth of exploration. Yeah. Then presumably, if there's a discovery, you may want to go through the economic study phases. Who finances that?
Yeah, so at that point, it becomes a full JV opportunity where they'll fund 75% and we'll fund 25%. And the reality is, we're an exploration company. We're not going to mine it. We're going to take it to a level of a resource, and then we'll sell it off to somebody else. So for us, our name of the game is to drill, explore, build up the resource, and sell it off to a developing company.
Right, and you got 4 deals exactly like that?
We have 4 deals that are done almost identical to that. Yes.
Right. Okay. Fine. And then you've got another 7 deals in the bag somewhere. So how do you advance those? How do you attract people to them?
All right. So first of all, look, when the markets have been shit for the last few years, we haven't been sitting around doing nothing. We've been building this company out. We've been building our technical team. We've been building relationships with our First Nations partners, signing agreements across all our projects. We're continuing to add projects in the Athabasca Basin, which is extremely difficult to do because we've got the technical team to do that. We've got relationships with all the vendors, all the drillers, all the camps, all the helicopter pilots. All that's been worked on behind the scenes, and we're continuing to advance these projects. So look, we went from one project, Davidson River, to adding our Sundog, to staking the Atlantic Canary and Ascent. And now we've got the Rocus and Corvo this year, which we're going to be doing geophysics on and get those drill ready for 2025. And look, it's going to be a remarkable year. We've got $31 million that have just come in the last 4 months. We're going to be spending $9 million at least on exploration programs in 2024. And we're setting up 2025 and 26 to be remarkable as well.
Right, but the 31 million is against specifically those 4 projects, right?
That is correct.
Right. So coming back to the 7, it's like, how do you advance those through the phases? How do you raised a little bit of money before Christmas? I think you closed it off for Christmas. What does that allow you to do?
It allows us to, first of all, our next 2 projects that are in the pipeline are Corvo and Rocus. So we staked those last year. This year, we're going to get those ready by doing geophysics and get those drill ready for next year. And then we'll be looking for new partners to come in to advance those on similar type deal structures. Davidson River is our flagship. That's the one that we've got just to the south of the JR zone by F3 and just to the west of Arrow project by NextGen and Fission's Triple R. It's in that beautiful area. And what we're going to do with that one is drill that ourselves this summer. We've got it actually, it's so large now, we've continued to add to it that we divided it in half. Now, we may keep the whole thing for ourselves, or we may find a pretty serious partner to come in and work half that with us. So that's sort of the strategy on Davidson River.
Right. So Davidson, which we've talked about in the past, how much more money so how much did you raise? How much did you close before Christmas? 2.5?
Yeah, 2 million. Yeah, 2.6.
2 million. Okay. So do you say, well, we've got to go all in on Davidson and kind of get a good partner and attract a good partner? Would you kind of de-risk it and sort of maybe amortize some of that money across some of the other projects like Corvo, et cetera? I mean, what's the allocation look like? Yeah,
so we've got the funds that have coming in from the previous raise. Look, we're going to use that to advance Corvo and Rocus. Those are going to be about $750,000 to $1 million each to get those up to drill ready for next year. Davidson River is going to be about $2.5 to $3 million spend this summer, and that's our flagship. That's one we're going to be doing ourselves. And the other ones, look, they've got a little bit of extra cash to advance some more projects and also be staking a few other projects in the basin. So we've got cash coming in from all 4 of our JV deals. It's a combination of cash and shares and operator fees. So we're going to have the cash coming in for those are going to keep, take care of all the G&A for the year.
Right. Okay. And I've got to go to the share chart, right? Because in the context of a very, very strong spot price for uranium, right?
Yeah.
It kind of feels like the kind of sub $100 million companies haven't quite seen the benefit of that yet. Not in any meaningful way, right? Sideways, I guess some would argue, is a win for the last 2-3 years, but the reality is people would expect all uranium companies to be ripping on a hockey stick type curve. They're not. Why not?
Not yet. I mean, if you look at, I saw a chart at the VRIC conference last month in Vancouver of one of the juniors showing, what happens to the spot price, what are the majors doing, the developers, and the sub, 50 million market cap is, and they were flat across the board. So look, the juniors haven't really picked up on that yet, but it's coming. But not just everyone. It's not going to be all ships are going to rise with the tide. You want to look for companies that have actually got drill programs going. They've got good projects. They've got teams that can execute, and we've got that. So we anticipate when the market starts to move and we start talking about, our drill programs underway, people are going to get excited. They're going to see drill results all year round. We start drilling next week, Matt, and we're going to be drilling all the way until probably the end of October. Constant news flow, constant drilling. It's an exciting time for Standard and our shareholders.
And I guess you look. I give you some credit. You've been kind of agile and not decided we'll keep doing the same thing over and over and expect a different result. You have changed the model. That's impressive. But the market is ever evolving and changing, and you hope that it does kind of cascade down to some of the smaller uranium juniors soon. You've got to be flexible in that. But what do you say to your shareholders in terms of your willingness to dilute by taking money when it's there, when it's been offered?
Yeah, well, it's pretty simple. Either you take the money if you want to keep drilling, or you die. So for us, it's a matter of, look, we had to go to the market, we had to raise funds. The last 2 years, it's been primarily, Canadian traditional flow-through funds, which kept it coming in, it kept the drills turning, and allowed us to move our team forward, add to our technical team, and advance those projects and get them ready for where we are today. So in the last 5 years, we've been building a team behind the scenes that's getting a lot of respect in the industry. We've got a phenomenal technical team led by Sean Hilliker, our VP of Exploration and President. We've got 11 projects now. 7 are going to get worked this year. You tell me about another junior exploration company that's got 7 programs getting worked in 2024. It's remarkable what we've done with this company. And it's time for the investment community to sort of understand that and sort of learn about Standard and come along with us.
So talk to me about the model again. I'm fascinated by the model, right? I'm not going to dig in companies out about share performance, etc. in a market which has been pretty crappy for equities in the last 3 years. I'm not going to do that. I'm interested in people who think, change, agile, adapt to the environment, right? So if you look at some of the other companies out there, and I'm going to talk uranium specific companies with portfolios. Some have been able to unleash some of their value extremely well, and some have not. You know the space really well. You know all the players. You have conversations with each other. What model do you think for you is something that you'd like to emulate? What is genuinely a good model for you to emulate? Prospect generator is one thing, but it can be long and slow and ups and downs, etc. What do you think you need in the mix to kind of power charge, standard uranium 2.0?
Yeah, it's a great question. I mean, I'm not going to say that this is our model we created out of thin air. This is something we've been following for a few years. Look, as you mentioned, we're very close with all the uranium juniors in the space. We know the guys we know Jordan at Sky Harbor. We know Corey Bielik over at Canalaska. Of course, Deb at F3. They're doing the same thing. So we looked at what they did, what was successful, and how they've taken some of their projects and spun them out into JV models and kept some for themselves. So that's why we landed on this sort of hybrid model. Davidson River, we're going to keep all to ourselves and drive that for our shareholders. We believe that is the real home run potential. And the other projects, we're bringing in JV partners to advance those as well. I mean, it's exciting. If you look what's happening with our Sundog project, and we can talk about that again, that's the whole Uranium City area being put together by one company, by some pretty sophisticated and technically competent uranium geologists. So that's exciting as well. So look, getting back to the model, we said, look, what's going to work best for Standard? What do we have? We've got a great technical team that's going to do the work. We've got access to all the vendors that we've built relationships with for more than 5 years. Sean Hilliker, 10 plus years, Neil McCallum, 20 years in the Athabasca Basin. We've got relationships with our First Nations partners, probably one of the best in the space. If you speak to them, the heads of those First Nations groups, they talk about us as one of their lead examples of how to do things properly. Talk to the Saskatchewan government. We always get our permits on time, on schedule. And what else can I tell you? I mean, this is a great space to be in. We've got all our projects. We want to see those move forward. We don't want to see them sitting on our portfolio gathering dust. We want to drive exploration, get money spent, get the drills turning, and make a discovery.
Talk to me a little bit about the First Nations, if you don't mind. So I'm just trying to understand all the moving parts here. The First Nations things has always been put forward as a problem, even in the Athabasca Basin, but more broadly in Canada. Lots of companies sort of come a cropper at later stages or kind of struggle to even get off the ground or at least stumble. What is it that, what were or are their concerns when you're trying to establish a relationship, a working relationship, financial relationship? What are the demands from them on a company like yours? And, what's the expectation of what it means for them?
Well, first of all, it can be a problem for some companies or it can be a strength for others. We looked at it as a strength. When we started this company, first thing we did was go meet with the First Nations partners before we started exploring, started building that relationship, build that trust. And it's been monumental for us to be able to get all our projects, letters of support. As soon as we send in the permit application, our First Nations partners are right there with us. So look, they speak to the partnerships we built. They have success. We have success. They have a lot of other companies that are showing up in their territories not doing that. And those companies are going to have problems, serious problems. So you better be aware if you're an investor, when companies talk about having First Nations relationships and permits and agreements, a lot of them say that and don't. So dig into it and figure out what's real and what's fabricated.
Right. Okay. Well, like I say, I just want to kind of catch up and try and understand what it is I'd be buying into if I'm buying shares from you, because like I say, it's a different model and I understand it better now. And I think, well done you. It's an interesting, obviously, macro. We don't need to get into the whole macro thematic. We get it. The demand outstrips supply for some time going forward. Athabasca companies, I think, perhaps need to maybe help us understand how quickly they will be getting into the supply side of the story and not just the development side of the story. It feels like, are there any other kind of red flags or kind of long poles in the tent which are potential barriers for you guys actually getting stuff pounds out of the ground?
Nah, for us, Mick, our focus is discovery, and we're going to do that by doing drill programs on our projects. So we're going to fund those and keep those going. For us, the biggest bang for the buck for the shareholders is when that drill hole makes a big discovery, and that's what we're aiming to do. Now, for us, everything else we do is focused on that, and that's about finding good partners to come in and JV with us, getting all our drilling companies lined up. And when I say drilling companies, look, there's a whole swath of different types of drilling companies. You better make sure you've got one that's actually had experience working in the Athabasca Basin. One of the big things that investors are going to find out in this space as we progress over the next year or 2 years, there's going to be a lot of companies showing up that don't have, the ability to actually operate. They've never set foot in Saskatchewan. They don't have the relationships with the First Nations partners. They don't understand how staking goes, how permitting goes. They're not going to have relationships with vendors because there's only so many vendors to go around. And if you don't have those relationships built and those contracts ready to roll, you're going to be waiting in line a long time to get programs happening. So be very wary of companies that are showing up and don't have those relationships. So there's a handful of us. I think you know them and your investors probably know them. We've been there for a while. We've got this all worked out. So for investors looking at Standard, look, we've been there. We've got great projects. We've got a strong technical team. All the boxes are checked off. And now we're driving forward. We've got cash coming in. We're going to be exploring, 7 projects in 2024, drill programs nonstop. And the other part of the equation is we've got to tell the story. You can't just do your work. You've actually got to get out. You got to market. You got to let people know what you're doing. We're doing that with UMAT. We're doing that across multiple platforms this year. So spending the money on telling the story and actually doing the work to back that up. So 2024 is going to be an exciting year for Standard and our shareholders.